The largest crypto trading platform in the world, Coinbase, recently went public through a direct listing under the ticker symbol of COIN. Cathie Wood, the CEO and CIO of Ark Invest, has recently been loading in the Coinbase stock and has even sold some Tesla to purchase Coinbase. She has even stated that she believes Coinbase will easily return an equivalent or higher amount to Tesla, Square, Roku, Bitcoin, and the entire genomics sector. In this video, I will cover why Cathie is extremely bullish on Coinbase and whether you should be too. Welcome to Kazgain's Academy. If you're new to the channel, please consider subscribing for more content like this, and let's get right into it. Cathie Wood's track record has been practically perfect ever since she started Ark Invest in 2014. Therefore, when she's publicly bullish on a stock, we should at least consider why she sees a massive opportunity in the stock. Cathie is so bullish on Coinbase that Ark Invest already owns 807,497 shares of Coinbase, which is worth over $260 million today. This huge purchase of Coinbase forced Ark Invest to sell a portion of their Tesla position in order to purchase some Coinbase stock. In total, Ark sold over $179 million worth of Tesla stock, which provided them with the necessary capital to purchase Coinbase. Now, this isn't to say that Ark Invest doesn't believe in Tesla anymore. Unlike a typical fund like Berkshire Hathaway, Ark Invest has restrictions on the amount of cash they can hold. This is because Ark Invest's 5 ETFs are all active ETFs, which have stricter restrictions than other types of funds. Now that we clearly see that Cathie Wood is bullish on Coinbase, let's take a look at why she's bullish and what the opportunity is. If you haven't heard of or tried Coinbase before, it's essentially a platform where you can trade, borrow, lend out, store, and distribute cryptocurrencies. It's one of the largest crypto exchanges in the world and is trusted by customers all over the world. In fact, Coinbase owns 11% of the entire crypto market. There are a few crucial points that you must understand about Coinbase to get the full picture. The main catalyst for Coinbase over the next decade is the growth of the crypto economy. The crypto economy is the complementary economy where people use crypto as an alternative to currencies supported by governments, which are better known as centralized currencies. Most cryptocurrencies are decentralized, which means that no government can intervene with the crypto economy. And as the crypto economy grows, so does Coinbase.
What we're really seeing with cryptocurrency is the creation of a new financial system or economy, which we call the crypto economy. Think of the crypto economy as a complement to the traditional economy. It's more fair, more free, and more global because it's native to the internet. And in the crypto economy, people are now performing every type of economic activity, including earning money, spending it with merchants, borrowing and lending, raising money for their companies, and of course, investing to earn a return. When Coinbase first got started, we were a simple place for people to buy and sell Bitcoin. But as the crypto economy has grown, Coinbase has grown along with it. And we now have support for over 90 crypto assets, and our customers can perform many different types of economic activity outside of just trading. Today, Coinbase is a trusted platform, storing over 11% of all cryptocurrency in the world.
Now, you might be skeptical of exactly what competitive advantage Coinbase has. After all, anyone can just create a crypto exchange, right? The answer to that is no. There are several reasons why Coinbase has such a strong competitive moat over other exchanges. The first and most important advantage is customer trust. Since the inception of Coinbase in 2012, not a single person has lost any money on Coinbase due to security breaches. These security breaches are quite common in the crypto world. In 2019, 12 crypto exchanges were hacked, which has led consumers to lose all their crypto holdings. Coinbase stands out of the crowd because of its exceptional cybersecurity team.
In our business, a trusted brand has meant developing a heritage of security and embracing a culture of regulatory compliance. We have made significant investments in cybersecurity and are proud to be one of the longest-running crypto platforms where customers have lost no funds due to a security breach of the platform. Today, Coinbase is serving customers in more than 100 countries around the world. In the US, we're regulated by the Department of Treasury at the federal level and as a money transmitter by most state banking departments.
Another major advantage for Coinbase is its bank partnerships, with the main one being a partnership with JP Chase. The bank allows users to purchase crypto with a service named Chase QuickPay, which is literally free money for Coinbase.
Coinbase's culture of compliance has enabled us to secure blue-chip global banking partners like JP Morgan. And we are banked by 5 global, systemically important banks across the US and Asia. These bank partnerships are essential because they allow us to provide a direct connection between the traditional fiat economy and the crypto economy.
The last major advantage that Coinbase has is its easy-to-use user interface platform, which has allowed Coinbase to grow through word of mouth. According to Coinbase, 90% of all users signed up for Coinbase purely through organic growth or word of mouth. This is clearly one of the main reasons why Cathie is bullish on Coinbase. If you've seen Cathie's portfolio, you might recognize a pattern. Most of the companies that she owns sell their product through word of mouth. Cathie Wood's largest positions such as Square, Tesla, and Roku don't have to spend as much money on advertising as their competitors because the products sell themselves. This word of mouth growth matches exactly with Coinbase's platform. Now that we understand the opportunity of Coinbase, let's go more in depth on why Cathie Wood is betting big on Coinbase. The main reason why Coinbase is getting the valuation it has right now is because of its blowout Q1 2021 numbers. As you can see in this chart, Coinbase generated over $1.1 billion in 2020, which was up 136% from the prior year. In the first quarter of 2021, Coinbase made 2020 look like a total joke. The company generated $1.8 billion in revenue just in the first quarter, which is more than Coinbase's entire 2020 revenue. When it comes to profit, in 2020, Coinbase generated $322 million of profit. Again, Coinbase made this look like a joke in the first quarter of 2021, as Coinbase generated $765 million of profit just in Q1 of 2021. These numbers make investors extremely bullish on Coinbase, which definitely includes Cathie Wood herself. Before Coinbase went public, Cathie Wood stated that her price target for Coinbase was much higher than what she thought Coinbase would be valued at. Yet, she also warned about Coinbase's volatility, as she stated that the price of Coinbase stock is heavily dependent on the price of Bitcoin.
Do you have a price target for Coinbase?
We do. I am reticent to give it. It is far above where it's going to open, we think. Now, there are a lot of assumptions in there, and you want to talk about volatility, just look at a chart of Bitcoin. There's going to be great opportunities between now and 5 years to buy on dips, we believe.
Cathie Wood is a long-term investor, but that doesn't mean she doesn't take advantage of dips. With that being said, since Coinbase is volatile, she believes there will be plenty of buying opportunities, just like how Tesla did too. Now, the primary growth driver for Coinbase is the growth in institutional interest. This graph displays the total trading volume for Coinbase over the past couple of years. The boxed portions show the volume of institutional trading that is occurring on Coinbase. Back in 2018, there wasn't much institutional trading in Coinbase. In Q1 of 2018, only $11 billion out of $56 billion of volume was from institutions, which was 20% of the total volume. As we can see in 2020, institutional trading has spiked substantially. In Q4 of 2020, institutional trading represented 64% of the entire trading volume. Clearly, a large transition is occurring. Institutions are starting to take cryptocurrency seriously, and this benefits Coinbase. In fact, when Tesla purchased $1.5 billion of Bitcoin, they actually used Coinbase. As more companies take crypto seriously, the institutional trading volume will just continue to grow faster and faster, which will subsequently lead Coinbase to grow.
We do believe, however, that it has miles to go because institutional interest in Bitcoin alone, which is the largest cryptocurrency out there, is, we think, going to add up to $500,000 to the price of Bitcoin. And when I say that, we've based this on a study focusing on what institutions are looking for. They're looking for low correlations of returns. This is a new asset class. So institutions are interested, they are moving in. And if they add up to 5% in their asset allocation to Bitcoin, that alone could be up to a $500,000 increase in the price. So we're at the very beginning of what we believe is going to be a long and exciting journey.
As Cathie just mentioned, institutional investors could lead Bitcoin to go as high as $500,000. And guess who's the beneficiary? Coinbase. Cathie Wood sees Coinbase stock growing well over 15% per year in the next 5 years, which could mean anywhere from a 2x to a 10x return. What we do know is that Cathie Wood is extremely bullish on Coinbase's potential.
Okay, let me see if I can prod you a little bit more to give us specifics on a price target for Coinbase. You're reticent to maybe give us a number, but can you give me a ballpark on the percent gains that you think you could see, using your 5-year approach?
This is well above our minimum hurdle rate of return of $15, even if it does open, of 15% per year, even if it does open as high as $250 or $300. Even at those prices, given our assumptions. Now, again, we expect tremendous volatility in this. It's going to be unstable in terms of investors and analysts understanding what Coinbase actually is.
Unlike the clueless analyst that Cathie was referring to, we can actually find out what Coinbase is. The majority of analysts miss Tesla stock, and the same could happen with Coinbase. Coinbase makes money through two areas: transaction revenue and subscription revenue. Transaction revenue is the revenue created from the trading fees that Coinbase charges when users buy and sell cryptocurrencies. On the other hand, subscription revenue consists of a fee rate for storing, borrowing, or lending cryptocurrencies. Transaction revenue makes up the majority of Coinbase's total revenue right now.
We earn revenue from two main sources: transaction revenues and subscription and services revenue. Today, transaction revenues are our primary source of revenue. We earn a fee each time our customers buy or sell cryptocurrency on Coinbase. These transaction fees vary. In general, customers that trade higher volumes are charged lower fees. On average, our retail customers paid approximately 1.4% in 2020. These fees reflect the additional value we provide to users, such as integrated secure asset storage and fraud prevention.
While transaction revenue is the majority of Coinbase's revenue, Cathie Wood believes that this is about to change. When it comes to stock brokerages, the price to trade stocks has now dropped to $0 for most brokerage firms. Cathie believes that the same movement downwards in commission is likely going to happen with Coinbase and other crypto exchanges, which could have implications for the future.
Makes most of its money on the trading of Bitcoin and Ether. Those are the two biggest, and it's going into a lot of other cryptocurrencies and crypto assets. So it's got a lot of open-ended opportunities, but right now they're making about 70 basis points on each trade, on each dollar traded, and we think there will be fee compression, as there always is in the institutional world, and as competition increases. So I think the opportunities in this stock, to the extent there are dips out there, will come around the idea of, oh my goodness, how much is competition going to drive these fees down? And we do think the compression will be to 50 cents within the next 5 years, or 50 basis points. So you'll watch the dynamic: volume explosion, fee compression. Again, we'll pick our spots around volatility.
Essentially, Cathie Wood is saying that there will be lots of volatility in Coinbase as fee compression occurs. When investors start to realize that the transactional revenue decreases, this may lead Coinbase stock to crash, which could lead to a buying opportunity. Despite the potential for lower transactional fees, Coinbase does have a unique opportunity to grow through increased trading volume and growing subscription fees. According to Coinbase's S1 filing, subscription products grew 126% year over year from 2019 to 2020. In 2020, this subscription revenue was likely close to $136 million. Therefore, while transactional revenue makes up the majority of Coinbase's revenue, it isn't the only revenue driver. Now, we must go over arguably the most important part, which is Coinbase's valuation. As I mentioned earlier, the first quarter of 2021 was a blowout quarter for Coinbase. Based on the numbers Coinbase produced in Q1 of 2021, the stock is extremely undervalued. Coinbase is currently valued at roughly $85 billion, and Coinbase generated $765 million in Q1 of 2021. If we extrapolate Coinbase's Q1 revenue to the entire year of 2021, then we get an estimated net income number of $3.06 billion. At an $85 billion valuation, Coinbase is valued at a forward PDE of just 27. This is assuming that Coinbase continues its stunning Q1 performance for the rest of 2021. But either way, a forward PDE of 27 is extremely low. After all, Coinbase grew its revenues by 327% year over year in the first quarter of 2021, so this is clearly a fast-growing business. In this spreadsheet, I projected Coinbase's valuation with 3 different cases. The bull case is that in 2021, Coinbase's net income and revenue continue at the same rate as the Q1 2021 numbers. The base case is that in 2021, Coinbase's net income and revenue continue at 75% of the Q1 2021 numbers for the rest of 2021. Lastly, the bear case is that in 2021, Coinbase's net income and revenue continue at 50% of the Q1 2021 numbers. Then, I valued Coinbase at a PDE of 80 and a price to sales ratio of 30 in the bull and bear case, took the average of the two, and then calculated the expected price per share. In the bull case, I got $882 per share, and in the bear case, I got $691 per share. These numbers will come in handy soon. Lastly, for the bear case, I valued Coinbase at a PDE of 50 and a price to sales ratio of 20, took the average of the two valuations, and then got a price per share of $321. Then, I assumed that there's a 25% of the bull case happening, a 50% case of the base case happening, and a 25% chance of the bear case happening. By using these probabilities, I got a 2021 price target of $646 per share. Overall, I believe I used pretty conservative numbers, and I got a price target much higher than the current valuation of roughly $325 per share. My projected rate of return is literally 100% in 9 months. Overall, I do believe Coinbase is extremely undervalued at its current price. Even in my bear case scenario, Coinbase stock stays flat for the next 9 months. I wouldn't be surprised if Cathie Wood was reaching the same, if not even higher numbers than what I'm getting here.
If you do watch our trading, what you'll understand about Ark is we're extremely opportunistic. We'll buy the dips, and we are also at the same time very optimistic about how far Coinbase has to go in terms of delivering returns relative to our 5-year target. So stay tuned.
All right, stay tuned. Does it have 4 digits or 5 digits, the price target?
Well, if we're right on where Bitcoin is going, just Bitcoin alone, based on institutional investors getting involved and based on institutions diversifying some of their cash into Bitcoin, it has a lot of room on the upside.
While Cathie Wood and myself are both extremely bullish on Coinbase, none of us are financial advisors, so please do your own due diligence and invest at your own risk. With that being said, let me know whether you're bullish or bearish on Coinbase stock. If you enjoyed this video, please hit the like button and don't forget to subscribe, and I'll see you in the next one.